Good morning, sir. Good morning, friends. We are from Group 7. Would like to present our material about non-bank financial institution, which is consists of leasing, venture capital, Pegadaian, and also factoring. Before that, let us introduce ourselves, starting from my friend Alita Anastasia, me, Dwi Octaviani, and my friend Gilbert Maxwell. So next to the first material will be explained by me, which is about leasing. So leasing is providing capital goods either as a finance lease or an operating lease for use by the lessee for a specific period based on a periodic payment. So we can know from that there are two types of leasing, which is finance lease and also operating lease. So in finance lease, is a leasing activity in which the lessee, at the end of the contract, has the option to purchase the lease asset based on the agreed residual value. So you need to take note that the total lease payment during the initial lease term plus the residual value of the capital goods must be covered the purchase price of the capital goods and the lesser profit. So it also contains provision regarding option right. But conversely, the different side in financial list is operating list, which is you do not have an option to purchase the list asset. So you just only have a right to the operating of the asset. So you need to take a note that the difference between finance lease, the total lease payment in operating lease during the initial lease period do not cover the acquisition cost of the lease capital goods plus the lesser calculate profit. So the lease agreement does not contain provision regarding the lesser option right. In leasing, there are at least four parties included, which is the first one is lessor. A lessor is a leasing company or party that provides financing service to the lessee in the form of capital goods. The second is lessee, which is a company or party that receive financing in the forms of capital goods from a lessor. So lessor is the one that give you money, meanwhile lessee is the one that get the money. The third is supplier, which is the company or party that or provide goods for sales to the lessee with payment in cash by the lessor. Meanwhile, the last, which is bank or creditor, is the bank plays a role in providing funds to the lessor, particularly in a leveraged lease mechanism where the lessor financing is obtained through bank credit. So here is the classification of leasing company. There are three types of leasing company, which is the first one is independent leasing company. So this type of company operate independently without do any agreement with supplier, and they also act as a manufacturer. They could act as manufacturer and fulfill the capital good needs of its client by their self. So in here, below you can see the flow of independent leasing, which is they could actually get the asset from supplier or they could actually get the asset from themselves, and after that they could give to the lessee. The second is captive lessor. The captive lessor is arise when a supplier or manufacturer establishes its own leasing company to finance its product. So this can occur if the supplier believes that providing its own leasing financing will increase sales beyond the level achieved using traditional financing. So in captive lessor, you can see in the flow that actually captive lessor is the manufacturer, the parent company. They make other company, which is their subsidiary, as a lessor, which is act as a lessor, and after that give to the lessee. Basically, the captive lessor is the supplier or manufacturer that actually want to increase their profit by doing the leasing by themselves to fulfilling the good financing for them. The third is lease broker or packager. So a leasing broker function is to connect prospective lessee with lessor who need capital goods through leasing. So leasing broker typically do not owning the good or the equipment to handle leasing transaction on their behalf. So they only give to connect lessee and also lessor. So like broker. So the next material is about leasing financing technique. Same as the type of leasing, there are also same as the technique, which is finance lease and also operating lease. In finance lease, um, some sometimes also called as a full payment leasing. as a form of financing through a contract between the lessor and also the lessee, which is at the end of the period, the lessee have an option to uh, owning or acquisition of the property. So here is the characteristic of finance lease, which is the lease object remains the property of the lessor until the option is exercised, but after it's already exercised, it will be belong to the lessee. So capital goods can be movable or immovable. The lease terms of the capital good is equal to their economic life. The lessor may not depreciate capital goods unless accompanied by a purchase option based on the residual value. Next is finance lease classification in a finance technique. There are six types of finance lease classification, which is the first one is direct financial lease, which is form of leasing transaction in which the lessor purchases an asset at the request of the lessee and simultaneously list the asset to the lessee. So you need to take a note that the lessee does not previously own the capital goods, but they list the list can determine the goods specification, price, and supplier. So the lessee will ask the lessor to providing the asset for them. The second is sell and lease back. A sell and lease back leasing transaction essentially involves the leasing selling its capital goods to the lessor, who then enter into a lease contract for the goods. So it's different from direct. The sales and lease back in this case act as the party that selling the goods for use during the lease period agreed upon by both parties. So actually the lessee already have the asset, but after that they go to the lessor, give the lessor, and after that they lease that back. So at the end of the period they want to take the asset back. The third is leverage lease. This technique involves not only the lessor and lessee but also long-term creditor as the largest share of the financing for the leasing transaction. So basically, at the other transaction, the lessor is 100% or fully funded the asset, but in leverage list, they actually have the third party, which is the creditor. So the lessor financing portion typically range from 20% to 40%, and the rest will be the other party. The fourth one is syndicate lease, which is a lease financing agreement between more than one lessor for a lease asset due to risk factor. So maybe in this type of a finance lease, the one lessor is actually not have enough capital, so they need to the other lessor to be coordinate also in the same transaction. The fourth is cross-border lease, a leasing transaction conducted across national border where the lessor is domiciled in a different country than the lessee. So cross-border is like you from Indonesia, but you actually the lessor is from Malaysia, for example. And then the last is vendor program, which is a sales method implemented by a manufacturer or dealer in which the leasing company provides leasing facility to the buyer of goods. You need to take a note that the lessor pays the vendor according to the price of the goods selected or determined by the buyer or lessee. So here is the second leasing financial financing technique, which is operating this. So the lessor intentionally purchase capital goods on and then they will list them. Unlike a finance lease, in an operating lease, the total periodic payment do not cover the total cost incurred to acquire the capital goods and also interest. Here is the characteristic operating lease, which is the lessor as the owner of the lease asset, then transfer the asset to the lessee for use for periodic time, and they do not have a right to purchase the property, and then the lessee, in exchange for the use of the asset, pays a periodic rental fee to the lessor. And then the lessor assume all economic risk and maintenance of the asset, and the lessee must return the lease asset to the lessor at the end of the period contract. As I said, they don't have a right to do the acquisition, so they will give give the property back to the lessor. You need to take a note that the lease asset become the property of the lessor at the end of the contract period and is then remarketed, or the lessor will be leasing the property again. The next module is about venture capital. So venture capital sometimes it's actually help or carry risks or can also be interpreted as a business, which is a venture is a risk or have largest or high risks. Therefore, venture capital is a capital invested in a risk business. So we can conclude that venture capital is an equity participation from a finance company to a company that needs funding for a specific period. The company received the capital is often referred to as the vested party, while the finance company that provide the funds act as the venture capitalist or investor. Venture capital firm is equity participation, participation to the purchase of convertible bonds, and financing based on profit sharing. So here is the example of venture capital, which is the first venture capital in Indonesia, is called PT Bahana Pembinaan Usaha Indonesia or PT Bahana PUI, which is 100% owned by the Ministry of Finance and Bank Indonesia. So it's actually regulated in government regulation number 18 of 1973. So why did they make this PT, which is to foster and stimulate the entrepreneur skill of small and medium-sized enterpriser or entrepreneur by providing all necessary assistance to achieve these goals without neglecting sound business principle, and also to assist the smooth growth of small and medium-sized enterprises by giving giving or providing equity participation in authorized capital of the company concerned, identifying project and preparing feasibility study for the company concerned, and also providing the necessary funding or personnel to address technical and marketing issue for the company concerned. Next, but the characteristic of venture capital, there are four characteristic. I'm sorry, four characteristic, which is the venture capital is categorized as a high risk investment. So, many of the venture capital is actually based for the medium sized enterprises. So, like giving them a funding. Second is venture capital financing is long term and does not yield immediate return or slow yielding and is irregular. The third is venture capitalists and partner company have equal status as shareholder. So at the end of the period is different from other entities. So at the end of the period, if the company have trouble, the shareholder will also have the trouble. So it has added value. Venture capital financing will be meaningless if it actually not accompanied by other packages such as added value through technical assistance, management, and also business strategy. So there are three types of venture capital, which is the first one is direct equity participation. This type of financing involves direct investment in a joint venture company, where the venture capital company acts as a shareholder in the joint venture company. So you need to take a note that the return received by the venture company capital firms when investing directly in share includes stock dividend, capital gains, and annual management contract. The second is convertible bonds, which is provided by venture capital company as usually provided to company whose partner are already performing well and still need fund for business development. Meanwhile, existing shareholders still want to own share in the company. The third is profit sharing or limited participation scheme scam. So, a profit and loss sharing financing scheme as a financing scheme for a joint venture company that determines as a certain percentage of the joint venture company profits. You need to take a note that the venture capital firm act as the capital provider and operational activity can be outsourced to the joint venture company. That's all about my material. The next material will be presented by my friend.
My name is Alita. My episode number is 7, and I would like to explain about Pegadaian. Okay, history of Pegadaian. So Pegadaian originated from Bang Panlining, established by the Dutch in Batavia on August 12, 1746, to provide credit using a pawn system. When the British controlled Indonesia, this bank was dissolved and replaced with the Leasing style system, which allowed the public to open pawn shop with a license, but many usurious practices emerged. This system was later replaced by the Pat-style cell, which granted licenses to those who paid high taxes should misuse still occurred. And the Dutch East Indies government finally established Pegadaian as a government monopoly through Stadsblad number 131 on March 12, 119, and first in the first state Pegadaian was established in Sukabumi on April 1, 19 and first, which is now celebrated as Pegadaian's anniversary. At the beginning of the Republic of Indonesia, the offices were temporarily moved from Karanganyar or Kebumen and Magelang due to Dutch aggression, and before finally returning to Jakarta. Pegadaian status changed several times from a state company in 1961 to Perjan or Perusahaan Jawatan in 1969 and to public corporations or Perum in 1990, updated in 2000s. And up to now, Pegadaian has been operating for over 100 years, continues to fulfill its public services obligation and contributes significantly in taxes and profits for the government, even while the majority of other financial institutions are experiencing difficulties. So before we move deep to Pegadaian, I would like to explain the pawn business in Pegadaian. So in daily life, sometimes we need money for important or urgent purposes, but the money we have is not sufficient. And in such cases, people usually reduce unnecessary spending or seek loans from various sources from neighbors and money lenders to other financial institutions. If the required funds are relatively small, it's not a problem as many cheap and fast sources are available. But for those who have valuable items, money can be obtained by selling them. Um, However, selling items mean losing them, and sometimes the amount of money obtained is too large, and which may lead to overspending. And to overcome this problem, people can pledge valuable items to certain institutions to obtain temporary funds, and the items can be redeemed once the loan is prepared. So this is what is called pawn business. And according to Undang-Undang Hukum Perdata, pawning is the right obtained by a person who has a debt over a movable object. And the movable object is handed over the creditor by the debtor or by another person on behalf of the debtor. So the debtor grants the creditor the authority to use the movable object to settle the debt if the debtor cannot fulfill the obligations at maturity. So, what is pawn business? Pawn business is the activity of pawning valuable items to a specific institution to obtain a sum of money with the item redeemable once the loan is repaid. And this business helps people who need urgent funds without losing valuable items and prevents them from falling into the hands of usurers with high interest rates. And what is the characteristics of a pawn business? The characteristics are there are valuable items that are pawned, and the loan amount is adjusted to the value of the pawn item. The pawn item can be redeemed after the loan is paid. And the company conducting a pawn business is called a pawn shop, but in Indonesia, officially only Perum Pegadaian is authorized to conduct uh, this activity according to pawn law in the Indonesian Civil Code or Undang-Undang Perdata, and its mandate is to provide loans based on pawning to protect the public from internal financial institutions such as usurers. Then, um, where's the source of funds of Pegadaian and the use of funds? In the source of funds are the fundraising funds used by Puram Pegadaian to run its business. Come from like several sources. The first one, short-term loans from banks, so which constitute most of the short-term funds, like about 80%. Then short-term loans from other parties. This including the debts to partners, debts to customers, tax liabilities, secured expenses, defense income, and others. Then bond issuance by 1994. So Pegadaian has issued by two bonds, so each worth 25 billion in 1993 and 1994. So totaling it is about 50 billion rupiahs. Then the last one from their own capital. So consisting this is consists of initial capital from state assets outside the state budget amounting to 205 billion rupiah, government capital participation and retained earnings. So this also include the accumulated profit since Pegadaian was established during the Dutch East Indies era. Then the use of funds of Pegadaian for the first one, cash and liquid funds. So this is to meet due obligations, disburse pawn loans, operational costs, tax payments, and other liquidity needs. Then for purchase and procurements of fixed assets and inventory, such as like land, building, offices, computers, vehicles, then furniture, safes, which are essential for smooth operation even if they do not directly generate revenue. Then, for operational funding, so this is include employee salaries, honoraria, equipment maintenance, and other operational costs. Then disbursement of funds for pawn financing. So more than 50% of funds are allocated here because this is the main activity and primary source of revenue through interest from customers. In addition, in addition to potential income from securities investment and auctioned collateral. Then the last one from other investments. So this is the unused funds can be invested in short or medium term investment. For example, in property in collaboration with third parties to generate additional income, even though it is not the main source. Okay, what is the movable items that can be pawned? So the movable items that can be pawned include jewelry such as gold, silver, diamonds, and gemstones. Then vehicles like cars, motorcycle, bicycles, and etc. Then also the household items such as kitchen utensil, tableware, etc. And electronics like cameras, refrigerators, radios, television, and etc. Also, there can be machinery, textiles, and other items that considered valuable by Pegadaian. So this is depends on the um Pegadaian itself. But however, due to storage limitation, human resource limitation at Pegadaian, need to minimize risks borne by Pegadaian and compliance with applicable regulations. Uh, there are also certain items that cannot be pawned, and those are like farm animal of livestock because they require special storage and maintenance, then agricultural produce because they spoil easily, then large quantities of merchandise due to storage limitation, easily damaged perishable or shrinkable items, very dirty items, large vehicles, art items that are difficult to appraise because it's subjective, then flammable items, firearms, ammunition, and explosives, then items for rent or lease, government property, and of course, illegal items that is really restricted to be pawned. Then pawn loans require the submission items as collateral, and the loan amount depends on the item's value. So each item from prospective borrowers is appraised by experienced and trained appraisers. And Pegadaian has appraisal guidelines based on the type of item. For pocket items like gold, they do the appraisers check the central market price or HPP, then test karat and weight and determine the appraisal value. And for the gemstones, they use the central standards, test quality and weight, then determine the appraisal value. But for the warehouse items such as cars, machinery, electronics, and etc., the appraisers check local market price or HPS and determine the appraisal value. And appraisal value is not equal to market price, but multiplied by a certain percentage set by Pegadaian. Then the appraisal value of the item to be pawned is um not equal to the loan amount given. And after determining the appraisal, the officer determines the loan amount that can be provided based on a certain percentage of the appraisal value, also set by the Perum Pegadaian itself, and usually ranging from 80 until 90%. 90%. And customers must repay the loan along with interest or sewa modal according to the terms agreed at the time of loan issuance. And repayment can be made at any time without waiting for maturity and is paid at the cashier along with the pawn ticket. And after the repayment and fulfillment of the other obligation, the customer can redeem the pawned items. Then, what is the benefits and advantages by the pawn businesses? The advantages for the customers. So the main benefit for customers who borrow from Perong Pegadaian is the availability of one street at a relatively simple procedure and in a faster time. So this is make the borrowers life easier to borrow money. The first one, valuation of movable assets by experienced and trusted institutions or personnel, and determining the value of an item between a buyer and seller. It can often be difficult to reach a fair agreement. Then, safe and reliable storage of movable items. So, the customer who are traveling feel unsafe keeping their valuables at home or lack proper storage facilities can securely store their items at Pegadaian. Then the advantages for Pegadaian, so the expected benefits of Pegadaian based on the services provided to its customer are the first one, income derived from the interest or rental fee paid by borrowers. Then second, income generated from fees paid by customers for certain services provided by Pegadaian. Third, the fulfillment of Perum Pegadaian's mission as a state-owned enterprise engaged in financing by providing assistance to people in need of funds through relatively simple procedures and methods. Then, according to the government regulation number 10 of 1990, the profits earned by Perum Pegadaian are allocated as Universal Development Fund for 55%, General Reserves by 20%, Specific Reserves by 5%, and Social Funds by 20%. And then, what are the Perum Pegadaian products? There are like several products that Perum Pegadaian has, and I would explain. There are about like 10 products. The first one, KCA or Quick Safe Credit. So it is collateral based loans under pound, low, fast, safe, easy procedures, and this is for the short term loans, range to 20,000 until 200 million rupiah, and the collateral that can be pawned, uh the items that can be pawned, the collateral are jewelry, vehicles, electronics, household items. And maximum loan term is 4 months, extendable by paying interest and admin fees. Then the second one, Kreasi, fiducia installment credit. So this is support of MKM development and flexible for 12 until 36 months, about 0.9% monthly flat. The collateral like BPKB vehicle can, and it can continue to be used for business. And this is for fast disbursement, about 3 days. Then the third one, Krasida, pound installment credit. Um, this loans for micro or small entrepreneurs with monthly installments, so it is flexible for 12 until 36 months. Also, 0.9% monthly flat. And the collateral are gold jewelry loans up to 95% of appraisal value. Next is Sharia pawn or Aran. So Sharia compliant loans. This is Sharia compliant loans, and the fees only administrative and ijarah. And the collateral are gold, diamonds, vehicles, and electronics. The maximum loan in Sharia pawn is 90% of appraisal value. Next is appraisal surfaces. This is the surface to assess the value of items, for example, gold and gemstones, like I explained before about the appraisal. And then it is provides certainty of item value or quality. Next is safe deposit surfaces. This is the surface to safely store items and valuable, and the storage period is about 2 weeks until 1 year, and this is extendable. The next one is Krista, Household Business Credit. Krista supports household business development and the loans up to uh, 3 million rupiah, fixed installment up to 36 months. And this is for fast process, about 3 days, interest 1% per month. Next is Aran for micro or small business. So this is Sharia financing for micro or small entrepreneurs. The flexible term for 12 until 36 months. And the collateral are BPK vehicle loan up to 70 percent of appraisal value. This is fixed monthly installments and can pay in full with ijara discount. The next one is Murabaha precious metals for external investment, and this is sale of gold for investment purposes and flexible term under the Murabaha agreement. The last one is Kuchicha, instant, fast, secure money transfer. This is for the domestic and international transfer in cooperation with Western Union. And this Kuchicha is fast, safe, and no bank account required with competitive fees. And this service available at all Pegadaian branches nationwide. So that's all about my explanation in Pegadaian. The next one about the factoring, what explained by my friend.
And next, we will be talking about account receivable factoring or anjak piutang. So, account receivable. It's the evolution of anjak piutang in Indonesia financial management parallel the expansion of credit trades practiced in the mid 20th century, 20th century. As the Indonesian economy grew, and commercial transactions become increasingly complex, enterprises adopted systematic credit tracking frameworks. The implementations of anak piutang allowed businesses to disaggregate their total receivable into customer-specific accounts, enhancing the ability to monitor payment schedules, identify delinquent accounts, and improve accuracy and financial reporting. Next, we will be talking about classifications of Anjang Piutang companies. So, Anjang Piutang can be classified into various types based on the scope of service provided and allocations of risk between the factoring company and the client. Each type of factoring services offers different levels of financing, administrating, and credit protections, and collection responsibility, making it suitable for varying business needs and risk tolerance. Understanding these classifications can help um, businesses to choose the right factoring arrangements that aligns best with their operational and financial strategies. There are full service factoring, resource factoring, bulk factoring, maturity factoring, agency factoring, invoice discounting, recourse factoring, and non recourse factoring. So, full service factoring, it provides comprehensive services including financing, administration, and debt collections. Resource factoring offers financing maturity notification service without additional services such as credit risk or collective management. Maturity factoring is the factoring company acts mainly as supervisors and credit protectors while the client manage collection operations. Agency factoring is the agency company invoice in its name, but the client handles the collection process. Invoice discounting, the factoring company provided financing only without managing debt collections. The client is responsible for collecting receivables. The resource factoring, the client retains the credit and must repay the factoring company if if the debt fails to pay the debtor. fails to pay. And non-resource factoring is the factoring company assume the credit risk. The client is non-liable if the if the debtor defaults. How anjak piutang is paid and used. So anjak piutang is paid through collections made by the factoring company from the debtor when receivable matures. The seller company receives immediate cash minus a fee or a discount from the factoring company at the time of sale of the receivables. The immediate liquidity is generally used to fund working capital needs, cover the operational expense, or invest in business's growth without waiting for normal payments term. The factoring company role includes debt collection, debt control, and sometimes credit risk assessment based on the agreement type. So, as what I said, these are the ways. So it improves the cash flow stability, reduce administrative burdens, enhance credit management and collective efficiency, protect businesses from debts, and depending on the type of factoring agreements, some factoring type shifts of the risk of non-payment to the factoring company, does not increase liability to the company balance sheet, allows companies to offer longer credit terms to customers, enables companies to focus on growing their businesses and improve production efficiency, and improve financial planning and stability to ensure consistency cash flows. And that is it from our presentation. Thank you for listening, and thank you everyone.